Yeah, good morning and welcome to our webinar on FinTech and digital payments in India. Let me just briefly introduce myself. My name is Christoph Pfeiffer. I'm the Deputy Head of the Advantage Austria office here in New Delhi. I hope you can all hear me very clearly. I'm a little bit sick, so with my voice, it's not that good as usual, but I hope you can still understand everything that I'm saying. So now let me briefly go through the agenda of the webinar, and for that I would like to ask all our speakers also to switch on the camera for a brief moment so that we can all see you in the beginning. So in the beginning we will just have this introductory session, then we will hear from the FINO Payments Bank about technology solutions in the banking sector. Then we will hear from Ms. Priya Darshini about the UPI technology in banking or in payment settlement, and then we will also have a company testimonial, the Cashy app, and in the end we will have a brief time for Q&A. So with that, please switch now the cameras off again, and let me just mention a few words about our office here in New Delhi. So we have the main office of Advantage Austria in New Delhi, and we also are responsible for the surrounding markets and surrounding countries like Bangladesh, Sri Lanka, Nepal, Bhutan, and Maldives. So if you have any queries on that countries, of course, we will also support you. And we also have in India smaller offices in Mumbai and in Bangalore for the western region of India and for the southern region of India. And now with that, I would like to hand over to our first speaker already, Anand from FINO Payments Bank. Please, if you can come online again and take over from my side.
Welcome everyone. I'm Anand Bhatia. And first of all, thank you so much to the entire team here for putting this together. It's quite a privilege and an honor to address this gathering. Totally open to questions as we go along. What I'll do is I will talk you through FINO Payments Bank. What are we as a business? Along this, as we go along that journey, you'll also get a sense of the Indian consumer. How do they decide, what goes on in their mind? What do these consumers look like? Real consumers out there in the market buying something from a bank or an insurer, etc. And our perspectives on the opportunities available in the fintech space in the country, because we are actively engaging with fintechs on a fair amount of the projects that we are doing. Very, very happy to take questions as we go along or towards the end. That's how we would play it. So I guess with that, I'll jump straight into the presentation that we have for you. So this is what we call it. This is a walkthrough, and it is a search for opportunities, because that's what you are looking for as far as the Indian market really goes. So let me give you a sense of who we are really at FINO. The business that we are in is that we digitize cash, plain and simple. And that's how we play a very, very important role in the entire fintech space, or even the financial inclusion space in the country, because we are literally the entry point where a lot of people who are underbanked can start joining the formal financial services system by first and foremost digitizing their cash. So there are points at which we collect the cash. So we convert physical cash into a digital form so that it can be stored, it can be moved, and very, very importantly, it can be available to the consumer when, where, and the type he or she wants it. They want it in digital form, physical form. They have micro ATMs across the country. They can just go out and withdraw there. A lot of you would have heard of the term challenger banks. I mean, these are pretty popular as a term out in Europe and the United States. So banks like N26, Monzo, Starlight, Revolut, and a few others in the US. Our DNA is very, very similar to these, what are called the challenger banks. Unencumbered, no legacy systems. We have a very, very open network philosophy. We are working with 42 API partners, very open again to API integrations for folks who want to move in financial products and need the backing of a bank, we are open for business. We have a phygital network. I'll spend some time explaining what a phygital network really is in subsequent slides. A very, very asset-light model, 150,000 merchants or 300 branches and API partners. A merchant, again, we'll cover it in fair detail later, is essentially a point at which this consumer is digitizing his or her cash, is going out and transacting, and this is a point where all banking services are being made available. And a lot of technology goes in ensuring that these services can be seamlessly provided in every nook and cranny of the country. We are agile. We pivoted we pivoted about 8 months ago from a high-cost fixed asset branch structure to a very, very asset-light merchant model. It's paid us great dividends. We are a bank for millennials. Today, 51% of my portfolio is already millennials. Consumers that are coming through the door, almost 70 to 75% are millennials. The average age is about 25 to 27 years. And these are people new to responsibility, previously marginally underbanked, actively looking for a bank that helps them get a sense of identity and recognition. We are focused on emerging Bharat, which is largely the underbanked segment in the country, which is where there is maximum opportunity for a lot of financial services products. And this is also where the hunger for these products is the most. Right price, right products, so very, very no frills, simple products. We've really, really focused on creating banking-ready customers. So today, when a customer comes and opens a bank account with us, the guy actually walks out with a ready-to-use debit card, which is a RazorPay or an NPCI card. You'll be hearing from our colleagues there later. So banking-ready customers, no cultural constraints. We create a non-threatening environment, and we are on track to be India's first profitable payments bank. So that, in a nutshell, is really us. This is what the India pyramid really, really looks like. So while at one end you have the high net worth individuals, large corporates who are really serviced by foreign banks. Then there is the affluent segment, which has private banks working on it. The part that you see in red, okay, and we've circled it out, is really, really the market that we as a bank are addressing, and that's also the largest part of the pyramid. So the mass market segment really is whom we work with. And this segment has always had a lot of challenges, and these are the challenges that we've gone ahead and solved, and we've really seen a lot of opportunity in these challenges. So if you look at the kind of challenges that people had, traveling long distance to go to a branch. Unfortunately, there was a need to visit a branch for everything. Very, very long waiting periods in a branch, unfriendly staff, very cash-based kind of transactions, really not welcome, very complicated paperwork, business hours which are not suitable. So small entrepreneurs would find it very difficult to step out at 2 in the afternoon and go out into a bank branch and transact. We just brought banking back to them, right to their doorstep. Our merchant points are open till 8 o'clock, 9 o'clock in the night. So which means even after a day, folks can go out and actually complete a banking transaction. And we don't stop a customer just because the guy is transacting a very, very small amount. Any amount is welcome. I mean, even if it's a rupee. So which means that doors are always open for business and for their business, for the ticket size that they are very, very comfortable with. So as a bank, we really solved for these kinds of problems. And as a fintech, I mean, that's essentially inherently who we are. We develop the right technology solutions to be able to deliver this. So which means a very, very easy way of onboarding the customers. I can onboard a customer and get him or her banking ready in 3 minutes. My technology platform enables me to provide banking services at the customer's doorstep. So through a very, very robust platform available on a handheld device. So the bank actually comes to the customer rather than the customer coming to the bank. And that's what I was talking about, the phygital approach. So we combine the merits of both the physical and the digital. And businesses which are desirous of expanding a lot into India will increasingly have to look at this model. A pure play digital model may not really work, nor will a pure play physical model work. Physical model, obviously, because difficult to scale, time consuming, too many complexities. And a pure play digital model, similar challenges of acceptance. So when you go phygital, which is a mix of physical and digital, what you really have is a business model that works for everyone. Yeah. I'll just take control of this, sorry. So this slide really, in a sense, talks about what we mean by phygital. So where we acquire a customer physically and then assist the customer to migrate to a digital platform. Now, this is something which those of you who are interested in the Indian fintech space will also, I must tell you this, that a lot of brands in the e-commerce space, including those who are selling jewelry or specs and stuff like that, are increasingly moving to this kind of a model because and that's where the customer feels far more comfortable in dealing with the brand because you're essentially hand-holding this consumer who may be first-time digital to start adopting to a digital means. So I think this is very, very critical from a business model sense when working with the Indian market. This is our aim, and open to partners who are going to help us get there. So on the map of India, we are already 1.5 lakh plus merchants and growing, and we have about 1.2 lakh through our API partners, always willing to add more. I'll spend a couple of slides giving you a sense of our customers so that you get a sense, a flavor of what this consumer in Bharat really looks, sounds, and behaves like. So these are some very, very interesting, consumer stories. So where Chandra, these are all people whom I visited personally and spent time with. He runs a small business selling, sweetmeats stuff. He deposits whatever money he gets at the end of the day, with our bank. He's able to do this because he gets doorstep banking from us. And this means that whatever money he's saved up doesn't randomly get spent, but he can actually use it. Similar way, Mr. Jaiswal out of Patna, that's in Bihar again. The guy is illiterate, but very, very sophisticated in his thinking of business. In fact, uses doorstep delivery and credit to really move his business. Works with us, very, very simple account opening process. Has bought health insurance from us because it's important for his growing young family. So he was new to responsibility. You can see a young daughter there. He's got them covered with a very, very simple health insurance product that we have. We have numerous of these stories of, customers, small business owners who are fairly new to the banking system and are increasingly using a bank such as ours to deposit cash on a daily basis, convert cash into a digital format, to be able to access the right kind of insurance product, to be able to send money home or receive money from somewhere else, and lead a far more enriched life than what they are currently living. Some of more of our customers. So again, small businesses, but this is really where the opportunity is, because this consumer, when he or she sees value, is far more open to adoption and would do it without the need to be bribed by virtue of a lot of cashbacks. I'm sure this presentation will be made available to you, so you could go about it at leisure. But what I want to quickly get to, without this, these are our merchants. These are the kind of shops that they run. Now, very, very interesting stories about each one of them. The reason why I'm emphasizing these stories are that you'll realize that at the end of the day, there are about 3 or 4 reasons that really help a business succeed, whether it is fintech or non-fintech. There are 500 reasons why it may not, but reasons for success are very, very few. And those literally are just being available longer than the other guy, service with a smile, and that just really ensures that that they are meeting the kind of success that they deserve in this market. Now that you have a sense of us as a bank, I just want to give you a sense of the Indian consumer, because this background is important because it will help you appreciate the fintech environment or the fintech opportunity really available in India. So we are 1 billion people, and obviously there's potential, right? But what you should really know about India is our mindset and our decision making. Now, this is critical because now you're entering into the shoes of the Indian consumer. So if you look at the mindset, let me bust some myths. People always think India is a very cost-conscious market. No, we are value-conscious. Everybody believes that we want everything free. Well, obviously, if you're giving something free, people are going to take it. But the reality is that the consumer is more than happy to pay in whatever form it may be. It may be his time, it may be actual cash, higher purchases, whatever the case may be. if they see value. And we've seen this that because we are able to provide the last mile banking services, digitize their cash, customers are more than happy to pay a premium for all that to be handled because they see value in that. So consumers do not necessarily want everything free. They're happy to pay when they see value. Also, there is, a myth that India is a insanely heterogeneous market. I mean, it is reality, and languages do change every, few kilometers. So in that sense, we are, yes, very, very diverse culturally. But, and I'm giving you a big secret out here, that largely when it comes to buying behavior, very, very simple biases or heuristics are at play. And when one understands that, one realizes that actually operating in the Indian market is incredibly simple. This is just to give you a sense of the biases that consumers, and this is going to be true fairly universally. So you can actually apply this even in your home markets, and you will see that ultimately when consumers buy, there are a few biases or heuristics which are at play. In fact, if this is relevant in your home market, also more than happy to have other discussions really around this, because this, as a behaviorist and as a marketer, I've always seen to really hold true. How do they decide? The ease at which we come to their minds. So, which is why HDFC Bank, which is a financial services powerhouse in India, comes so easily to people's mind, because what it provides is this quality banking, but with the warmth of and accessibility of an Indian bank. It's very, very easy to conceptualize HDFC compared to so many other brands, and that just makes the choice more and more easy. Past experiences, obviously, and our biggest learning here as Fino has been that in all these past experiences, small gestures matter in the Indian market. Just being available from 7 a.m. to 10 p.m. and servicing a customer with a smile has actually helped our merchants, ramp up their businesses phenomenally. In fact, even we did a project where we just started thanking customers for their services. We got a 10% increase in business just by saying thank you. Of course, all other hygiene parameters have to be in place for something like this to succeed, but a simple thank you can go a long way. Comprehension and credibility of the offer. When a consumer can understand what is being said, then the willingness to buy just simply moves up. And very, very important is aversion to ambiguity. Here I've just taken a non-financial services example, that's Asian Paints. Asian Paints, probably India's most successful paint company, has really built its entire business on just saying that, look, no matter what color you want, I'll make it available. So when people know that whatever it is that they want, it will be available, there is no ambiguity, they're that much more willing to accept a brand. So this is typically how decision making happens in a market whose 3 myths we have busted. And so with this, I just tell you, the fintech space and what's really available. Very simple, very large space, but if you are a clone, and believe me, the Indian market is inundated with a lot of clones of successful business models, then very, very simple, you'll fight in price. As I said, right? Consumers are very, very happy to pay if they see value. So if they see value, you're on. If they don't see value, you really, really compete on price. So where all do we see big opportunities really? Lending, evergreen space. Very, very natural, because more and more people are always going to need money, and as in certain informal structures, family structures for borrowing start coming down, the formal lending space will only grow. So lending is evergreen. Basis our interaction in the fintech space, we see a lot of action coming in the insurtech and the investment advisory space. Because again, this is a great way of combining technology and very often a phygital model of taking products such as insurance, which have traditionally been considered difficult to buy. There was a saying always that people don't buy insurance, they're sold insurance to. So insurtech and making insurance and last mile available, whether it's through the B2B route or the B2B2C route or the B2C route, is something that is seeing a lot of traction. Again, digitizing value chains, agri or closed ecosystems, and enabling them to function by a lot of acceptance of digital payments, technology-driven inputs. So what are commodity prices? Hence, what should the farmer price his products at? Is something which is gaining a lot of value and a lot of interest. So if this is an area of your expertise, then you should really, really evaluate a lot of action in the Indian market space. The B2B businesses are only growing. Logistics right now is attracting a lot of capital and a lot of growth, because again, 1 billion odd consumers. if they're going to consume, material has to move from point A to point B. So logistics, very, very B2B DAR, supply chain kind of business, is attracting a lot of technology and a lot of capital also. Anything which is API driven is going to grow. So that's where banks such as ours become very critical, because we're very, very actively acting as platforms. So open banking and API driven growth is something which is always going to be there. And SaaS models, I mean, literally pay as you go. Then whether it is power by the hour, or whether it is people leasing out infrastructure and literally paying as each and every consumer consumes, is something which is really up and goes. So if you have the right proposition, which could even be like insurance, car insurance, as your mileage goes up, or consumption of, let's say, any if marketing content moving out, in a B2B kind of an environment where you literally pay as you use. Now the whole service, as a business, the SaaS model, really, or software as a service model, or pay as you go, is something which is a very, very active and hot space in India's fintech sector. So this is broadly, as we see, where a lot of action in the fintech space lies. And I just hope that over these last 17, 18 odd minutes, I've been able to give you a sense of a bank which is focused on India's opportunity area, which is Bharat, as well as how consumers are buying. So it gives you a sense of, once you hit the Indian market, what to really look for. Any help needed there, we're always available. In fact, we're the last mile in anyone's rural strategy increasingly. And what's really hot in the fintech space. I hope this was incredibly useful. Very, very open to questions right now, towards the end, or even later. And with this, I would hand you back to Delhi and to the next speaker, which is from NPCI. So I think we're good to go. Yeah. Thank you so much.
Yeah, Anand, thank you very much too for your presentation, and thank you also very much for dealing with the myth that we have in India and about India and about doing business in India. Thank you that you also mentioned that. And we will take the questions at the end of the webinar. And you mentioned also the PowerPoint slides. We will certainly make them available with your consent also to the participants of the webinar. So thank you once again.
Sure. Thanks so much.
And thank you. And now with that, I would like to move forward to our next speaker. It is about unified payment interface, UPI, and Miss Priya Darshani will tell you more about it. Please.
A very good morning, all of you. I'm Priya Darshani, representing on behalf of NPCI to present what UPI actually does in NPCI, and also how NPCI plays a key role. What's the role of NPCI in payments system today? In India, as already we know that in India, we had launched the then Prime Minister Narendra Modi had launched Digital India campaign in 2015. With the Digital India campaign, it was launched to take India, make India digitally, progress India in a digital fashion. So with that, we have in NPCI, basically it's a National Payments Corporation of India, where it's an umbrella of organization which caters to both the digital payments and digital settlements in India. We have a gamut of digital products in NPCI, which is say RuPay, which is similar to a Master and Visa card. We have a RuPay card, which has debit card, contactless card, credit card, and name anything. It's like the RuPay is our brand name for the card segment. Then we have our mobile banking services, IMPS, which is immediate payment service, which is the mobile banking service which is used within the banks. It's mostly a mobile banking application of every specific bank. Then we have UPI, which is a unified payment interface. I will detail you more about UPI in the coming slides. In addition to that, now that we have covered, I've told you the card segment. Then we have the payment segment where mobile banking services, which is IMPS and UPI. Then we also have AEPS, which is Aadhaar enabled payment service, which is also one of our products wherein Aadhaar and biometric details are used for digital transactions. Then we have NETC. It's also a product. It's a national electronic toll collection. That is like when you pass a toll gateway or something, it is used for collection of toll of that particular vehicle digitally. And these are like, I've just named a few products among the different products which we done. Even the NFS, National Financial Switch, which is used for ATM for withdrawal of cash and other things, is also one of our products. So I just introduced what's like NPCI and the different products that is that's a part of NPCI to drive this digital dream come true. So coming to that, how will the digital dream come true? Like in case if majority of the customers, whoever who are there in India, majority of the population on India, it's around 1.3 billion. Our population is 1.3 billion, but still without the user, without the internet or mobile or smartphones, there is like the digital India, vision of digital India can't come true. So with that, there were several other campaigns also in addition to that of the digital payment segment, which was launched in addition to the digital payment segment, so that all these different campaigns put together can make that vision come true. So with that, since like from past, like it was launched in 2015, now it's just 3-4 years, we can see around half of the population of India have internet usage today. So this data is like this is like a big digital growth which we can see in the past 4 years, where from out of 1.3 billion people, there are around 560 million people who already have internet usage, and also there are like umpty number of users who have access to smartphones, mobile phone, around 1.21 billion people who have mobile phones, and around that half of them, like around 446 million out of them have smartphones. So with this different things which is there, it's possible for this vision of digital India come true. So as I just briefed about the overall India, like how India is planning to go digital, I would just start with detailedly go with how UPI, what's the role played in UPI, and to make this vision come true. See, in year of August 2016, UPI was launched. With that, we had hardly like around 0.9 million volume, and with the value of 30 crores. That was in the first month when we had launched way back 3 years back in 2016. But now, as you can see, the volume in UPI is around 1 billion a month. In this month of October, we had just touched 1 billion, and also the value of the transaction is 1,91,000 crores. So this is the huge growth which we had seen from past 3 years, the way UPI has grown. So now, as I've told, like how we had grown, I'll detail you more about what is UPI and what is the background of UPI, how we had launched, and what is the way forward. So UPI, as the name goes, it's like the unified payments interface. It's in the unified payments interface in the sense it is like a single app which can be used, wherein you can link multiple bank accounts to a single app and do immediate and instant fund transfer. And it works 24/7, 365 days. There is no there is no delay in the fund transfer. There's just a sender and a receiver, and the funds is transferred instantly through your mobile phone, where you have an UPI app installed in that phone. So coming to that, how a UPI is different from IMPS or any other mobile payment service, it is that a single app which has multiple, you can link any number of bank accounts in a single app and do the transaction instantly. Say I have bank accounts with HDFC, ICICI, HSBC, Citibank, say many bank accounts. But I need not download all the different bank apps separately, and I need not do different set of transactions every time I have to visit each and every app. Here I can have a single payment app which is UPI. Under that umbrella of UPI, I can link all these multiple bank accounts and do the transaction. And when I do a transaction, the fund gets transferred to the beneficiary bank instantly. So coming to that, how the security works, because the security is very essential as you're linking your bank account directly to your UPI app. So when coming to that, the security, we have a single click two-factor authentication, which means that there is multiple levels of security screening to identify whether it's that customer whose bank account, it is that customer who's doing the actual transaction. So there are two factors of authentication there. One is, as soon as you download an UPI app, there is a process called device binding which takes place in the back end, where your SIM card of the particular phone gets linked. It's like the SIM card is being bound to that particular phone, and it is being checked, authenticated whether the device of the phone, that is a phone, and the SIM is belonging to that person to which the bank account is also linked. In bank account, how in India it works is, in bank account we have a mobile number linked to a bank account, and it is through that mobile number, during this device binding process, we check whether the mobile number which is linked to the bank account and the transaction from the device binding also happens on the same device, where the SIM is present and where the bank account is being linked. So in this way, it's like with these factors of authentication, we would be first able to link a mobile number to a particular device and identify the user. That is first factor of authentication. Once that is done, the second factor of authentication is where the details of the debit card, as I had said, we have RuPay cards, MasterCard, Visa card, and many debit cards. We are open to all the cards. All the cards can be linked in UPI and the transaction can be done. So it's like the details of the debit card, that is the card digits and the expiry details of the card along is taken to set the UPI PIN. The UPI PIN is the second factor of authentication. So whenever a customer wants to transact using UPI, there is these two factors of authentication that is being taken care, that has the additional security, so that there is no fraud, or it's not no fraud happens and another customer would not dupe you. So this is how the UPI is more authentic. Then coming to the features of the UPI. In UPI 1.0, we had launched with a couple of features like pay, collect, and QR scanning and intent. These were the features with which we launched UPI 1.0. In case of pay, it is like as simple as what I told you before. Like you can just enter it's like you can enter the VPA of another person to do the transfer. What is VPA? VPA is the virtual address. It is similar to any Gmail ID. Say you know Gmail ID, right? So similar to a Gmail ID, you can create a virtual address as soon as you install your app from the Play Store. You can download the UPI app, create a virtual address for you. The virtual address is your identifier basically. It can be also, it's like mobile number or it can be your name, whatever it is like a virtual address, which is your identity. You can share the virtual address to another person. Say I am sending to some other person, so if I know that person's virtual address, basically I would be able to send him funds instantly. So that is it's called a VPA or a UPI ID. Okay, so based on that virtual address, I would be able to send funds instantly. So in case of pay, coming back to the features, in case of pay, I would just enter the virtual address of the another person, enter the amount, enter my UPI PIN, and proceed, so that the funds are transferred from my account to the other bank's account. There is also a second feature, that's collect. If the another person who wants to receive funds from me can raise a collect against me. In pay, I voluntarily pay somebody, but in case of collect, the another person raises a collect request to me, asking me to pay him so and so amount. So I, being the remitter, I can check that request, and if I am okay with that, with the request raised by him, I can enter my PIN and press a go ahead, so that the other person gets funds instantly. So these are the two major features, pay and collect. In addition to that, we have a QR code, QR pay. How the QR pay works, we have a UPI QR, which is again unified payment interface QR, which can be scanned from any of the existing UPI apps, and the payment happens instantly. So with that QR is being placed at every merchant outlet, wherein a customer who walks inside the merchant outlet after purchasing goods or whatever, he can just scan through his UPI app the UPI QR, and can immediately send funds across to the beneficiary, to the merchant. See, so this is the one more feature. And in addition to that, there is an intent feature also in UPI. In intent feature, how it works, it's like you have multiple UPI apps, say in your mobile phone. On going to a merchant site, say let's take the example, say of Amazon, and you purchase something online and you want to pay using UPI. So you instead of directly entering your UPI ID and raising a collect request against you, you can also just go and select like pay by UPI, in which there would be a pop-up of all the UPI apps which are downloaded on your mobile phone. From those apps, you can select any of the app which you want, go inside the app, check the amount, enter your UPI PIN, and proceed with the transaction. So this is how the intent feature works in UPI. So with these features, we had launched UPI app in 2016. We had launched with only around 20 banks in 2016, but as on date we have around 143 banks live on UPI in our complete ecosystem. So even we have around 50 plus UPI apps. All the major bank apps, major banks have their own UPI apps, and which is there on Google Play Store. Coming to this, these are the different banks. Like as I had already said earlier, there are around 142 banks live on UPI. These are the different banks. You name any bank, almost all of the banks, say public sector banks, private banks, regional rural banks, cooperative banks, all of them are on UPI. And coming to the merchants, as I had already said, we have the QR, UPI QR placed at every merchant outlet, and all these merchants, wherever a customer goes, can just scan the UPI QR and do a UPI payment. These are the different merchants who are live on UPI. You can see any of the sector, like say billing, retail, insurance, or travel or education or e-com, name any sector, all are these merchants who are live on UPI as on date. Then, as I told you, like since the time UPI was launched, for a couple of years, we had only these are the basic features: the pay, collect, QR, and intent were the basic features in UPI 1.0. Just 2 years after UPI 1.0 was launched, we had come up with the UPI 2.0. This is in August 2018. Last year in August, we had launched the UPI 2.0 functionality. UPI 2.0 is just an additional which has additional features as that of 1.0. We have based on the use cases and also the customer's requirement, we had brought in many more new features and also improved the existing features in our UPI 2.0. So these are the few of the features of UPI 2.0. I would brief on each of them for a couple of minutes. We have our UPI mandate. Mandate in the sense it's like a standing instruction in bank. Say you have taken a loan from one of the banks and you want say a particular amount, an EMI, to be deducted say every month for a period of say 1 year or 2 years or whatever it is. So for that, we generally in India, what we do, we go to a bank, we take a loan. After taking a loan, we give a standing instruction. We fill up a form, say this is say deduct on so and so date for a period of 2 years this much amount, and we sign on, endorse it, or we also give some post-dated checks. This might be different ways in which a standing instruction is passed for deducting the EMI amount from your account, bank account. In case of UPI, you need not go to visit any of the bank branches. You can just sit at home and just open your UPI app and create a standing instruction to say to a merchant or say anyone against whom you want to pay a equated monthly installment, EMI. So with that, we had created a mandate feature in which we have option of creating a standing instruction sitting at home. Then coming to the next feature, which is overdraft in UPI. Overdraft in the sense, it is overdraft account is similar to a loan account wherein a customer is given a overdraft facility, like you can withdraw like on and above. It's a sort of a loan facility which a customer is given from a bank. So in UPI 1.0, we had option of only linking a savings account or a current account in UPI and do a transaction. With the overdraft facility, we have an option of even linking the overdraft account in UPI and do a transaction. That is the second one feature. Then the next feature is coming to the signed intent and QR. In UPI 1.0, I would have told you a normal QR, a UPI QR, and also briefed about what's an UPI intent, how the different UPI apps are popped up during a payment. So that is the intent functionality. But in UPI 2.0, we have something called as a signed intent and a signed QR. What is a signed intent and signed QR? It is basically encrypted. It's like it works on basis of public and private key encryption. That is, instead you can't mimic anyone. Basically, a QR of a particular merchant belongs to only that merchant, and it can't be mimicked or copied by any other merchant. So for that, there is a set of keys called public key and private key in encryption. So the QR is basically encrypted with the private key, and the public key is shared to NPCI, where NPCI has the repository of all the public keys of all the merchants. So when as an individual I go to a merchant and scan a signed QR, you get you can fetch a public key from NPCI's repository, and you can also the QR has a private key, and if the public and private key combination works, then only the transaction would go ahead. Similar to that, the intent also, signed intent also means the same, that there's a combination of public key and private key by which you can do, it is adding to the security of the QR and intent. Then coming to the next feature, which is invoice in the inbox. It is it's a feature wherein you view your bills or invoices before you pay for them. Say you want to pay, like as I had given an example earlier, you visit Amazon website and you have selected few items on the cart, and you wish to pay by UPI. Before paying, you can view your invoice, said like a link. Invoice will be in a form of a link. On clicking the link, you will have a PDF downloaded wherein all the items which you have purchased and you have billed for is shown, and after seeing that, you can go ahead and enter your UPI pin and go ahead with the payment. So in this case, you can know for what you are actually paying for. Say even a mobile bill which is being sent to you by, say, Airtel or Vodafone, or say any of these telecom service providers, who sends you a UPI collect request with mobile bill amount which you have to pay. Before paying, you can always check the bill details. In UPI app itself, you can click, open the link and check the bill details, and then go ahead and authenticate the payment. This is invoice in the inbox. Next, coming to foreign inward remittance. In UPI 1.0, it was more domestically ruled product. It was like it was working like only within India. A saving account or a current account customer can transfer funds from one person to another person. Whereas in case of UPI in foreign inward remittance, which we had launched in UPI 2.0, with that any person even in abroad can send money to person in India using UPI. How does it work? It works very simple, similar to what's happening today. A person who's in abroad can just see, he can, if he has his NRE or NRO account in India, he can as well use his UPI app, link his NRE NRO account with his UPI app, then enter the virtual address or account and IFSC of the person to whom he wishes to transfer funds who's in India. He can just enter the account IFSC or virtual address and enter the amount, enter his UPI pin and go ahead for the transaction. Either he can do that, or a person in abroad can walk to his nearest money transfer agents, MTAs or RTOs, wherein he can just give, say, a US dollar or any other currency which he wishes to transfer, and he can just give the account and IFSC or say the UPI ID of a person who he wishes to transfer the money in India. You can just give the details and give the US dollar to that MTO, money transfer agent, who will in turn act as an intermediary between the bank in abroad and the bank in India, and he would just pass on the details, same information, to a bank in India, who would in turn do the UPI money transfer. So in this way, a person even sitting in abroad can transfer money to a person in India using UPI. So it's as simple as that. For example, a virtual ID is like Priya@HDFC. That is my virtual address. So a person in abroad just needs to go there, just give the currency, tell that he wants to transfer, say, some $50 to Priya@HDFC. The $50 equivalent INR will be converted by bank in India, and Priya@HDFC will be credited with that amount equivalent of $50, and I will get in my bank account linked with HDFC, that amount in INR. So that is how the foreign inward remittance works in UPI. Coming to this, like the one-time mandate feature which had shown in the previous slide, how does that one-time mandate feature works? What are the few use cases of the one-time mandate feature? I would brief you that. In India, we have RBI, who's Reserve Bank of India, who's a central bank in India. Reserve Bank of India had given us approval for a one-time mandate. Currently, one-time mandate being it's not a recurring mandate, it's just a one-time mandate. Means you can only create a mandate against a specific user for only one time in the as on date. We have approvals for recurring mandate coming very soon. So, but with one-time mandate, there are many use cases and functionalities which I have shown here. A few of the use cases which I would like to talk about is IPO. It's the initial public offering. IPO is like shares, right? In a market, when you have when you're going to launch the shares of your company for the first time, it's called the initial public offering. So with that initial public offering, you need not go to the old-fashioned brick and mortar model wherein you have to fill in long forms, give a instruction to a bank, asking him to deduct block so and so funds for an initial public offering, and wait till the time all the forms are getting processed and your account is and later on when the shares get allotted, your account will get debited. You not wait for all those things. With UPI, it's basically you can sit at home and do and apply for an IPO. So how it works basically, you would be probably having a share broker with whom you would say that you want to buy this many shares of a particular company. So with UPI, you just need to tell the broker that so and so is my UPI ID. Say the VPA, again coming to P@HDFC is my VPA, and I want to have say some 50 shares of say a company which has applied for IPO, which has opened up for IPO. So with that 50 shares, I would be telling to my broker, so this is my VPA and I want this. So the broker will in turn approach the security markets in India, which is SEBI. And SEBI would in turn give the request to a bank, is called a sponsor bank, who would be representing SEBI for that particular IPO. He would raise collect request to me. The sponsor bank would raise a collect request to me, like Priya@HDFC, allot 50 shares to Priya@HDFC. So I'm sitting at home and I get a request wherein I have I've got a request of say I would be on approving that request. I would be given allotted of 50 shares. If my lot is drawn, obviously. So with that request, I would just need to enter my UPI pin and give a go ahead. As soon as I enter my UPI pin, the amount equivalent to 50 shares will be blocked in my account, in my bank account. And once the share is allotted, I'll get shares and the amount will be debited from my account and I will get shares instead of that amount. So this is a wonderful use case of IPO, initial public offering, where UPI mandate can be used and where as a customer you can just sit at home and do a transaction. Then coming to the next use case, it's like a cash on delivery. What's cash on delivery? Basically, in cash on delivery, how it works is that you buy something on Amazon. Again, going back to our previous example, you buy something on Amazon. After buying something on Amazon, you give an option, pay by cash. when the customer, when the delivery boy comes to your doorstep with the good, you select option of pay by cash and you complete your payment. Then what happens, the delivery boy comes to your doorstep and at that time you're run out of cash. You don't know now how to pay him to receive the goods. Instead of that, you can just select the option of UPI, wherein if a delivery boy walks in with the goods, you can just select the UPI functionality, enter your UPI PIN once again, and yes, the payment is done. Enter the amount and the payment is done. So there is no hassle of paying him upfront and keep waiting and thinking whether the delivery would come or it wouldn't come. Maybe the goods, you wouldn't get the goods properly, or it might be the goods are damaged. There are many other issues. Instead of that, you can just select UPI. As soon as you get the goods, you can enter your PIN and the payment is done. So that is another use case of UPI mandate. And then coming to a gift scenario. Gift, it's like a surprise. All of you must be knowing, it's like anyone gets excited talking about gifts. In case of UPI also, you can create a mandate, say it's somebody's wedding or birthday. You can create a mandate against that particular UPI mandate against that particular person. Say again, Priya is the rate HDFC, for example. Say somebody had created he wants to gift me, say, some $50, and they have created a mandate on my name, create pay Priya at the rate HDFC $50, and they have created a mandate on date of my birthday or something. They would come to me and they'll just give me a request, initiate a request to me telling that this is the amount which we have given, this is the gift which we are planning to give you. So you can just go ahead and accept the gift. You can just click the accept button, by which immediately the mandate would get executed and $50 would get transferred from his account to my account. This is how the gift works in UPI. Then there are also advanced bookings which you can do using mandate block fund functionality. It is like when you travel, stay in a hotel, or when you want to do your travel bookings like your flight bookings or any other bookings, you can use UPI mandate functionality. So say in that case, when you don't travel, say you booked a hotel room and you don't check in into that hotel, so on that particular day you can always cancel that booking. You have created a mandate that's like particular amount is blocked in your account against a particular merchant, and if you don't go on that particular date, you don't wish to check in, then you can cancel the mandate and the fund will get transferred to your account immediately. And UPI mandate is also used in case of escrow deposit. What's escrow deposit? It's like security. Escrow deposit is like a security which you give it to the somebody. Like there are many contract related work which is being done in India, contract related jobs. In case of contract related jobs, to get the contract you have to park in security deposit to get the contract. So in case of that, in today generally what do people do? They create a fixed deposit FD, and creating a fixed deposit, they will go give that fixed deposit to that person from whom they want the contract, and in case they get the contract, then fine. If they don't get the contract, then they have to get back the fixed deposit and other things. Instead of that, in case of escrow deposit through UPI, you can just create you can just block your fund, create an mandate, and give it to the person who's going to give you a contract. In case if the contract goes through, then well and good, or else you can cancel the mandate and get the funds back to your bank account. This is how the UPI block fund works. Yeah. So as I had already said, like what is UPI 1.0, what is UPI 2.0, what are the different use cases of UPI 2.0. So I've almost touched upon all the features and also like what are the different use cases of UPI. But we are not stopping here. We have many more product features which we are planning to come up, launch many more product features, and this is the way forward slide which I had shown, which is internationalization, recurring mandate on UPI, and proximity payments. So coming to internationalization piece, as I had already told you, we are accepting any person from abroad can transfer funds to person in India using UPI. This is vice versa to that, where any person in India who's going abroad can also use UPI and pay to a person in abroad using in that currency. Say, for example, we have also launched this product in Singapore with Nets Singapore. So how does it work? Similar to UPI, which is there in India, Nets is a payment system in Singapore. So we have partnered with Nets in order to launch this product of ours, in which we'd be using a Nets QR. Nets QR is again similar to UPI QR. In Singapore, they use a QR called Nets QR. So when a person from India goes to Singapore, he can just take his UPI app, scan the Nets QR, and pay to that merchant in Singapore dollars. And from my account, I'm going abroad, from my account the equivalent INR will get debited, and the merchant, and to that merchant account the equivalent dollar amount, Singapore dollar amount, would be credited. So this is how we had gone international. That was just a pilot project which was launched in the month of August 2019, wherein we are even planning to open up this internationalization piece with UAE, Dubai, and others, wherein a person who's Indian who's going abroad can just scan the country specific QR codes and do a payment instantaneously. How it works, we also have this real-time real-time currency conversion piece incorporated into this. Say I'm buying some for 50 Singapore dollars, I buy something. So as soon as I scan the Nets QR, I'll be getting 50 Singapore dollar, and equivalent of that 50 Singapore dollar currency in INR, I would be shown that after currency conversion, I would be shown that so and so INR amount would be deducted from your account. So if I'm okay with it, I can go ahead, enter my UPI PIN. So the transaction would go ahead and my account will be debited with INR and the merchant's account will be credited with a Singapore dollar. So with this currency conversion piece, and also it would be very easy for Indians who are going abroad. And similarly, we are even open for the foreigners who are coming to India, who can scan a UPI QR and do the payment. So that is, we are also working with Nets on the similar thing, where a citizen of Singapore who's coming to India can scan our QR, and the same thing happens where his account is debited in Singapore dollar and our merchant's account here in India is credited in INR. So we are going international with that piece here. And coming to the recurring mandate on UPI, as I had already said in the previous slide, we had a one-time mandate fund where I had given the use cases of say IPO, cash on delivery, all these things I had given. With the recurring mandate functionality, how it works is like you can schedule an EMI payment, say every month, or every bi-monthly, annually, whatever may be the frequency pattern, you can schedule through UPI payment, you can authenticate once, and automatically every time on the scheduled date, the payment gets deducted from your account instantaneously. A few of the recurring mandate use cases I have on my next slide, coming to my next slide. Then the third feature which we are planning as a way forward is a proximity payment. Proximity payment is basically transferring the payments, funds from one account to another account using UPI and using a faster technology, a much easier, faster or say easier technology like NFC, near field communication, or say Bluetooth, or say RFID technology. Those things we are planning to incorporate in UPI, so that it's like an additional way how UPI can be used in different merchant outlets. Additionally, how similar, see, you have debit cards, right? You have a contactless card which works on a EMV prints technology and other things. Similar to that, in UPI also we can use it contactless. You can use it using RFID, NFC, audio based, and different ways. So this is the proximity payment. How are we planning? We are planning to integrate with UPI. So, like, coming to the few of the use cases which are about the recurring mandate, as I had already said, there are EMI payments which is possible. There are insurance payments which you buy an insurance from an insurance agent, and you can tell, say, every month basically, or every year basically, this much amount can be deducted from your account automatically. You can also buy mutual funds using UPI, wherein you can say same thing, like so much amount can be deducted from your account automatically every year or every month, say any frequency. Then loan payments, you take a loan from your bank or any of the financial institution, and you want to pay through UPI, you can just sit at home, get the and approve, create a mandate, and say every time, with a particular frequency, the funds will be deducted from your bank account. So this is the feature, and within 3 years, as I said, in 2016 we had launched UPI, August 2016. So within 3 years, some 2-3 months, within such a short period, we had won many awards and accolades. Here are the few of the awards which I have shown. This is for the digital innovation, the Economic Times Innovation Awards, the Scotch Award, Golden Peacock Award. All of this we had won for UPI, only for UPI, where it's like the digital initiative we had taken. This is to show the digital initiative which we had taken in India for promoting, to make the vision of Digital India come true. These are the different innovation awards we had won in UPI. Yeah, so thank you. Thank you. And yeah, the questions can be taken up at the end of the session, probably after the next speaker. So yeah, thank you.
Yeah, thank you very much, Ms. Priya, for this elaborate presentation on the unified payment system in India. So now with that, let us move forward to the next speaker, to the last speaker of today's webinar. It is actually a company testimonial, Cashi. And now I would like to ask Mr. Poturi to come online and present his best case. Thank you very much.
Namaste to all of you. Good morning and good afternoon, whichever time zones you are in. So I thank you for the opportunity. I represent Cashi. Cashi is a next generation digital lending platform for the millennials. So I'd like to take this opportunity to talk to you about our product and our perspectives and how we are using technology as the centerpiece of everything that we do. Okay, so first to set up the background, right? So I mean, so there are in the last 20-30 years, there are phenomenal changes that have that are at play, both sociologically and also technologically. I mean, on the face of it, we have in the last 20, 30 years, the predominance of, or the, the penetration of internet across the globe, across geographies. You have cloud as a reality. And, you have the sociological changes with the millennials coming to the fore, right? And this is a background I want to spend a couple of minutes on to talk about. So because this is fundamentally changing the marketplace. So millennials, when we look at the volume of millennials across the globe, they are a significant part of many of the countries. Definitely in India, we have about 440 million millennials out of our 1.2 billion population, 1.2 plus billion population. So that's a significant number. Similarly, if you look at China or other Far Eastern countries, you have a significant presence of millennials, and so also North America. So this is a reality. And the reality also is that millennials, their spending habits are different. Their thinking is different. Their approach to banks, when banking and finance, is different. So these are factors to be reckoned with. So I was reading up recently somewhere that millennials, when they were surveyed, 71% of them would prefer to go to a dentist rather than a bank. So that shows the mindset. Really, and also their loyalty and commitment to any certain bank is also very transitory, which means that when the convenience suits them, when the ease of usage or the benefits thereof are better, they would be happy to choose another bank. They are the people who are tech savvy, who are device savvy. They are the ones who are using online methods and also the mobile devices a lot more than the previous generations. Not to mistake, the other generations such as baby boomers and the generation Xers also are found to be using the mobile devices and the internet quite elaborately. So this is a factor to reckon with. Now, a lot of purchasing of millennials, over 50% of their purchases are done online. This is a reality. So their payment methodologies are online. So they want the convenience of online purchases and returns and payments and everything online. And the medium, the device of choice for them is a mobile for most parts. Now, when you put that, all of these factors against how the brick and mortar banks are catering to these requirements or this changing the terrain, you find that there is much to be desired. You would, as the picture there would depict, 33% believe that they won't need a bank at all. The millennial population doesn't think that they, one third of the population doesn't think it needs a bank at all. Or for that matter, so several other statistics that there are prove to the point that, hey, are the banks able to cater to these requirements? And the pretty much I guess the summary is that they are not. So now against this background is where we come in. Our chairman, Mr. Raman, around 2016, had seen this as an opportunity, a business opportunity for us to cater to the millennial population and the shortcomings of the current banking system, and how do we fill in that gap. So that is where Cashi comes in. Cashi is a digital lending platform. Like I said, this is more for millennials because they are more mobile and tech savvy, but I'll come to those topics shortly. So our core hypothesis in Cashi is like this, right? We believe that the social behavior of millennials is consistent across the globe, across geographies. That is one. The other factor is that with the predominance or with the high usage of mobile devices by the millennials, there is an opportunity for us to look into those aspects, the social behavioral aspects of their usage of social media and the mobiles, and be able to judge their credit behavior. So these are the core hypothesis of Cashy. Now, the reason this becomes a core hypothesis is also like this. If you look at it, really, by 2020, the expectation is that, 1.4 trillion dollar shopping is going to happen by the millennials itself. And by 2025, about 75% of the global workforce is going to be the millennial population. Now, when you look at it, even as of today, we have several millennials now joining the workforce. For them, this is their first job. This is the first time they're getting salaries credited into their account. Now, when they have to do banking, specifically when they have to go for loans, so any typical bank is going to look at their credit score. In India, for example, we have a credit bureau which rates the credit worthiness of individuals. Now, when they approach even these millennials, the first time employed, recently salaried millennials, when they go to a bank and ask for a loan, they're going to look at the credit bureau's credit score, and there's not going to be much of it really, because they don't have a credit history to back them up, and therefore they are falling short in terms of banks' ability to give them loans. So now they're left high and dry. So this is where Cashy sees it as an opportunity for us to cater to that segment, that demographic. So the hypothesis that we stated here becomes therefore the core of how we have molded our business. Now, Cashy is a mobile app only lending platform. So everything that is done is really a frictionless experience on a mobile app. We are available on Android, on iOS. People can download it, and it's available as a link in many places, and definitely in the Play Store and App Store it's available. They download it, and everything is on the mobile. So right from registering themselves as customers to requesting for a loan, to submitting their documentation, to getting the loan disbursed to their accounts, to repaying the loan, everything is by way of a mobile or online. So there is no human touch involved here. Everything is through a mobile. So that's the first part. And our experience and our entire the infrastructure or the underwriting and everything else is built on digital footprints. What kind of digital footprints are these users leaving, and how can we use those digital footprints to both be able to give a loan or deny a loan to a person, and also once a loan is given, how we are going to make it easy for the person to be getting that loan, or having that money in their account and make the repayments. And for us as a company, for us to be able to track that person, make sure that the repayments are reminded on a timely basis, things of that nature. So, and going further, once a person is approved for a loan, in the next 6 months, they don't need to be credit evaluated really. They can apply for another loan, once this loan tenure is done, or if the repayments are done. So it makes it very easy. In fact, we have a large percentage, I think about 85% of our customer base is really repeat customers. The ease of use makes them apply again when they need a loan, and also the fact that the second time around, the loan approval process is even more simpler, makes it appealing for them. Then we also have our interest rates are per RBI guidelines. We have set some rules around it in terms of the loan amount versus the kind of tenure that you have taken it for, and therefore your loan rates are also priced accordingly. We think that we are pricing the risk, and of course this is per the Reserve Bank of India guidelines. We are well within that. We have multiple loan products for different time ranges and for different the amounts. The amounts that are shown there are slightly incorrect. Really our tenures are 60 plus 62 days, 90 days, 120 days, so on up to 1 year and plus. So, and also primarily our market is the subprime, and these are all unsecured loans, and we are, for most parts, we are really targeting the millennials. Millennials primarily because they are the ones who are mostly device savvy and would like the experience of applying for loans through a digital medium. Now, going further, right? I mean, we have started this business about a couple of years back. 2016 it was when it started. 2017 onwards, we have had a significant amount of customers and loans that we are disbursing. There are about 4.3 million customers who have downloaded our app. So that's a significant number. It is a small number considering the overall marketplace in India. When we talk about 440 million millennials, and at least 50 to 60% of them have smartphones. If you consider that, our opportunity is a lot higher. But it is significant. 4.3 million is significant considering we just started about a couple of years back. Among that, our active customer base is about 1.2 million. So these are people who have taken repeat loans from us. These are people who we actively reach out to, and who reach out to us for their loans and things of that nature. So our mode of business also is that we are available both by way of the apps in the Play Store and App Store, but also we have partnerships. We have partnerships with several retail and online businesses, and this is also based upon our analysis of the market. We analyzed where are these millennials spending all their money. We care about it. This is data that we gather from the customers themselves. We found that a lot of them spend their money that they are taking as a quick loan in travel, or for medical expenses, or for online shopping, right? For repayments towards online shopping. So then what we did is that we went and made partnerships with some of these the key business players within those domains. Say, for example, a lot of people in India buy second-hand smartphones. Smartphone is a device of fancy for a lot of youngsters, and for that demographic which cannot afford an expensive phone, they go and buy even an iPhone or some other phone which is expensive first-hand as a second-hand. So we sign up as a partnership with one of those businesses which sells the mobile devices second-hand. Now, by making our app available on the same portal, the customer has an opportunity to, when they identify a particular device that they want to buy, there is quickly this link to Cashy which allows them to get an instant loan. So the whole, one of the important things to note here is that the entire loan process is super quick and super simple. So the customer starts by registering their name and their address and some very fundamental details, and then they're quickly going through a system, in this a workflow of screens where they enter further data, and lo and behold, the loan is approved. And if the loan is approved, within the next half an hour, the money is shown in their account or wherever they want it to be, right? So it's a very quick process. Therefore, a purchase through a B2B kind of a model where a customer goes to a particular business portal, identifies a device, and then chooses us as the payment option for a digital loan to pay towards the device, that makes it very easy. Similarly, we have other mechanisms also, such as home credit, where we offer loans to customers for the advance payments that they have to pay towards home loans, right? So we are not paying for the home loan EMIs perspective, but we are paying for the advance that they have to pay towards that. So we are closely watching the market. We are watching where folks are spending their money, and we are putting ourselves there for ease of ease of downloading our app and seeking a loan from us. So that is from a customer conversion perspective, and we are collecting data all the time. And I'll go ahead and talk a little bit more in the further slides about how the data is the oxygen, or data is the petrol that runs this engine, because we are a completely technology company. When we say fintech, that tech definitely has huge relevance for us. We do a lot of data culling, data munching, and then our decisions are based upon that. So, and we collect very comprehensive set of data. Now, that data that we collect from the social presence of the customer, from their mobile device, and other information that they may provide through documentation, we are constantly doing a lot of AI and ML algorithms behind the screens. So some of that is presented on this slide. Billions of transactions, or billions of computations are done every hour, so that we are, and in subsequent slides I'm going to talk a little bit more about that. Suffice it to say here, we are constantly computing our AI and ML algorithms, so we know the customer profile. We continue to rate the customer on a constant basis, and therefore keep our business healthy. And lastly, customers can get to us through Facebook, through Google, through LinkedIn. We have our presence on all of this, and we want the customers' presence in any of this social media known to us, because that becomes the basis of how we rate a customer's credit worthiness. Lest I get too trapped in anything else, I want to tell you about the core, one of the pioneering differentiators for Cashi. Like I said, a lot of new folks, people who are new to the employment, they may not have a credit bureau score, and which affects their getting a loan. So we have devised an alternative credit rating system, and this credit rating system is entirely based upon the social and the data collected from the social presence, as well as on their phones. Now it could be, and these are several things that we collect. When a customer downloads the app and registers himself or herself as a customer, we ask for their consent to collect some data from the phone, right? And it could be, what are the apps that they have? How many banking apps are they using on an active basis? Are they getting SMSs which is asking for repayments? What is their latitude, longitude? Does it correspond to the address that they have provided when they are filling our application form? And what is their permanent address versus temporary address? Do they have any friends who have already taken loans from us? Do they have anyone within their social network who have defaulted on us? How has their job history been? Have they just joined 3 months back? Have they joined 3 years back? Have they changed jobs 5 times, 10 times? Are they actively looking at the job hunting sites? All of this information we collect from their device, as well as from their social presence. And this goes through our pioneering and patented algorithm called SLQ, the social loan quotient. So based upon their social behavior, we assess immediately, within a few minutes really, after the customer submits their basic data and also their supporting documentation. We calculate an alternative score just based upon the social data that they have provided. And how do we do that? We do that by comparing their profile with the closest match that is already there. And by matching those profiles, we are able to tell, hey, this person is high risk, or this person is credit worthy, and we associate a score with it. It's a 1000 scale score, And if a customer typically gets 500 or 600 kind of a score, it's pretty good. It's like a credit bureau score. And our algorithm, it is self-adaptive and learning all the time. So we may be making mistakes, but with the amount of data that we have collected, our algorithm has learned and adapted itself. It's become a very powerful way for us to predict the credit worthiness of a customer. So that is one mechanism, right on entry. Now, once we determine the SLQ score of a customer, we say that you're good to go. You can get you're eligible for a loan. Now, what happens is that and then the customer says that, yes, I want a loan and I want this particular product. Let's say a 90-day, 50,000 rupees kind of a loan, right? And now what happens is that behind the screens, it goes to our underwriting team. Our underwriting team again is very small and nimble. So there is a goodness measure. Another AI algorithm that we are using is called a goodness measure. So this goodness measure, while the SLQ is calculating the creditworthiness, so the goodness measure is going to tell us about the default propensity, the defaulting propensity of this customer. Again, these are different set of AI algorithms that we use. So we know, hey, whether this person is green, good to go, we can give a loan. If they are found to be green from our algorithm, straight away the money is deposited into the customer's account. If we find that, yeah, it's in between, it's kind of a yellow zone, not red but yellow, then the underwriters are going to they physically look at the documents, all the paperwork, and then they're going to make a decision. So in any which case, right, for the customer, it's everything is on their mobile device. They would quickly get to know whether they were granted a loan, whether the money was deposited, and all of that good stuff. The point here is to really say how we are using AI and ML to make our decisions. So again, from the social loan quotient perspective, I don't know how clear this is, but the point that I wanted to make here is really that on the top, you find that we are getting our data, we are sourcing all of our data from the mobile device and the social presence. It may be the Facebook friends that one may have. It may be the LinkedIn contacts one may have. It may be the apps that are available on the mobile device of the customer. All of that information we are very quickly gathering with the customer consent. Now, once we get that, when you look at all this network here, what we really mean to say is that very deep learning algorithms are at play. So they are very quickly calculating into what a cascading network of profiles does this particular customer fit. It may be based on age, it may be based on salary range, it may be based on latitude, longitude, it may be based upon the company that the person is working for, the tenure that the person has, several factors. Now, it is not just one network, but several network of similar profiles that this customer will fit into. And our AI algorithms based upon that generate an SLQ score. Let us say in this case, it's a 800 that the customer got. So it's a good to go. So then we will communicate back to the customer saying, hey, your SLQ is very good. You're good to apply for a loan. And then the person applies for a loan. Then what happens if something changes on the customer profile? 1 month later, 2 months later, 2 weeks later, something would be changing on the customer profile, such as he or she has moved to a different city, or they have changed a job, or they got married, and many things can happen. So we are constantly collecting the data and reassessing their SLQ score. It may be good, it may be true that the person was calculated a particular SLQ score based on which he or she was given a loan and all of that good stuff, but we are constantly looking at the profile of the person and making sure that we keep our scores up to date. So that is the point that I'm trying to make in this picture. And then, like I said, we are a very self-adaptive system. So once the behavioral pattern of the individual changes, then the person gets moved into different other network of profiles. Not only that, he or she, the change of profile will have a deep impact not only on the customer but also similar profiles of other people. So for example, if somebody was working in a company X and the company X has recently laid off 10,000 people, now the fact that this customer of ours belongs to a company where there are several people who were laid off will have an impact on the network of those people who are of similar industry or similar company within our database, right? I mean, it is an example only, but my point is really that any change to any one customer will have a cascading effect on other customers in terms of how our algorithms will work. This is how typically in artificial intelligence machine learning algorithms work, and ours is no different. But the point here really is that we are not just calculating once and being happy. We are constantly recalculating and keeping our scores current. Next up, yeah. So if you look at this graph, I don't know for the viewers how clear it is, but the point that we are really trying to make here is that there is because these are machine learning algorithms, there has to be some optimal customer base and the scores that they receive before our AI ML algorithms start really becoming truisms. So in the beginning, as you would see, the propensity to make errors will be more for the algorithms. But after we reach a certain threshold of customers, right? So our default percentages automatically, these are the default percentages, automatically come down. So and it is significant, and it is a reality in our case. After the first few months, where we relied on SLQ and started generating it towards rating the customer credit worthiness. Very soon we reached a point where we found that our SLQ was really working because our defaults started, those customers who were defaulting drastically reduced, so much so that today our default percentage is something to be very proud of. It's about 3%, which is a significant thing. If you look at a banking system, most banks typically have a 2-digit default percentage, and we starting very recently have had now at 2 or 3% default percentage. So very significant. This basically goes to show SLQ is working very well for us. This is more of the same. The point I'm trying to make here is that we are collecting data constantly. There is mobile data that we are collecting. It is important for us to know your location. Say, for example, somebody with a bad intention of defaulting really has applied for a loan, has provided data to us, and then we find that his or her lat long is thousands of miles away from what they showed as a working address or a permanent address. Now that is something that we got to we take into consideration. Similarly, somebody applied for a loan, but and their lat long has never been the same since then. Or for that matter, somebody has applied for a loan, got the loan, but since then they are not even logging into our app, right? They have an active loan going, but they never looked at the reminders that we are sending into their app. So these are all the factors that we are looking at. We look at their SMS data, their call logs, so things of that, how much, call logs also tell a story. What time, how much are they spending? Everything has a story to tell us. Their contact list will help us look at, whether they are part of our customer base, and if so. So one of the social factors is really that it is true of India, and most likely it is true of the rest of the world as well. Typically, people do not want to be shown in bad light among their friends and family. So if you have given a contact person's name, and we are able to approach that or that contact, then chances are that you will not want to default because your reputation will be hurt with that person. So all of those are the factors that we consider. That is why, you know, there is a behavioral aspect that goes behind our thinking and our algorithms that we have written. We are heavily a technology company. We use the latest and greatest of technologies. We are open source. You find that it's Java, you know, engine that we run. We use modern, you know, interfaces, Angular, React Native. We are a cloud company. We are completely 100% on the cloud. Cloud helps us get the scale. You know, automatically it becomes scalable. Then, you know, things of that nature, and security is provided, reliability is provided by the cloud, and so you know, clouds gives us that. And we are also heavily API based. So for example, right, all the SMSs reminders that we send it through an API with a third party. All the advertising that we may be doing is through an API with a third party. And you know, several such APIs. All the, you know, we are connected to all the payment gateways, to the bankers. Everything is through an API driven interface, right? We in the middle of this diagram, you'll find you know, we have this loan origination and the loan management systems fully developed by us, and you know, being of good use for us. So very API based, very cloud based, and very AI and ML based is our system. So I think, you know, I wanted to run through pretty quickly. I hope I didn't consume too much time, but I'll be happy to take questions later on. Thanks for your time.
Thank you very much for the presentation. And now let's move towards the question and answer session. Please, all the speakers, switch on again the microphones and the camera so that we can see you and that we can hear you. And for the first question, let me stay with you, Rahi, maybe. I mean, very fascinating presentation, very fascinating software or algorithm that you have developed. And my question here is I mean, you're using it, of course, for your own clients, but actually, do you use this software algorithm or the big data and all these insights that you gather also as a service, so to say, for banks, so that you have a secondary, so to say, business model in a way, or is it just for your own customers?
So it is for our customers only. We are fully GDPR compliant, so we don't expose our data to anyone. We are using it, you know, for our digital lending purposes only.
Okay, thank you very much. Then the next question, it goes to Fino Payment Bank, to the presentation, and it refers to the last slide, where it was about the SaaS and the monthly payment recurring revenue business model, or the paying on the go or per use, so to say. What would you say is more popular or more common in India?
So, okay, so they're actually equivalent, right? I mean, you know, so SaaS is more software as a service. Essentially, it's pay as you go in any particular case. You know, so more subscription kind of a product, you will. So SaaS is definitely gaining a lot of popularity because they are asset light. You know, you don't need an upfront heavy investment to start up, and incredibly scalable. So it's just going to get more and more popular. And as you know, Rahi said, right? I mean, there's a lot of API work, you know, that's happening in. So courtesy a lot of these ways of connecting, it just gets, you know, it can just explode, right, as you know, as a service. So which could be, you know, anything from authenticating an identity to a payment to, you know, money remittance to somebody even leasing out certain, let's say, a machine that you can use to measure how bad your eyesight is, and then keep paying for it as you get more customers. You know, and this could happen in a rural area also. So this is just going to explode, and we see that the use case for a model like this is just going to keep on increasing because people see value in paying for something that they are using, happy to pay a premium for it. When they're not using it, don't pay for it. Plain and simple.
Okay, thank you very much. And let me stay with you actually for a moment. Yeah, more or less recently or in the recent years, all these big tech companies, they are also more and more moving into the banking or financial sector. I mean, for example, Facebook has launched this initiative with the Libra coin, where they also want to move into that sector, and then they have the slogan "Bank the Unbanked." And then keeping in mind that Facebook has actually already a customer base of 2 billion people worldwide. Sure. I mean, do you see this as a disruption happening to the banking sector, or do you think that there will be too much regulation from many national governments that it might be too difficult for big tech companies to enter this highly regulated sector of banking? What is your point on that?
So, see, one's got to appreciate that a lot of the regulations that, with a central bank in India or any other country that's going to keep, that's going to run with some of these regulations or rules, etc. The intent is the intent is to protect the end consumer, because very often the consumer really does not know or understand some of the technicalities around banking. Banking is still a fairly threatening kind of an environment. It's a difficult thing, right? And it's your hard-earned money at stake. So it's always going to be consumer first. Any regulator anywhere in the world is going to put the consumer first and all the other cool stuff later on. So I think that's only fair, and one should just accept it. That's reality. And then whatever is the law of the land, one has to really build around it and present your case. But what's the law of the land is the law of the land. So in that sense, I see a lot of consumer friendly or in the safety of the or the safety of the customer kind of regulations coming up just about everywhere. And anybody would then have to work with that reality rather than constantly fighting it or be against that reality. So yes, there are disruptions, but at the end of the day, what's most important is that the consumer has to feel safe, and the consumer's interests have to be guarded. And that's critical, because if there's no consumer left at the end of the day, then there's no point of having all these disruptions. So very clearly, any regulator is going to bat for the consumer. Let's accept that, and I think that's good, because we are consumers ourselves, and it will only just help the ecosystem get far more robust and safer.
Okay, thank you very much for this answer. Now let's move to Miss Priya. One question. I hope I understood your presentation correctly, and because you also were mentioning public keys, private keys, and something with blocks. So is this payment solution also based on blockchain technology? This is the first question. And then actually, since we have in the international sphere many blockchain projects also that are moving into this like banking sector or cross-border transfer sectors, like for example Ripple, which is quite established. I mean, is this a challenge to your business model, or could there be even some supplementary fields in working with them together?
See, blockchain would be an added advantage, and it can work along with UPI to make UPI much more easier and convenient, so that all the players in the ecosystem, if UPI is integrated with blockchain, can know what is the status of the payment at the same time. Say the sender, the receiver, everybody is aware of the status immediately. So blockchain is also there in our plan in the way forward, where we are already discussion with many of the blockchain companies to see how it can be integrated not only in UPI and also other payment systems within NPCI.
Okay, thank you very much. I think we're already pressed very much for time, but let's have one final question to maybe all of you. I mean, it's now already some years ago since Bitcoin was and all these cryptocurrencies was very much hyped and in the media. But could this new technology, or could Bitcoin or any other cryptocurrency, do you see this as a threat for your business model? or can it be an additional product that you can offer to clients, or is it something that is anyway too niche and too small that it's not interesting for you? Anyone who
So I think, you know, Bitcoin is not going to disrupt our business. Our business model, the technologies that we rely on, the way we have modeled it, Bitcoin, no Bitcoin, it does not matter. If we, you know, if the market is ready, if the regulators are okay, you know, if there is appetite for it, then we will be able to serve to that kind of a market as well. So I mean, I personally, from our business perspective, I do not foresee that as a disruptor for us.
Okay. Yeah, thank you very much for answering all the questions, and also for giving all the questions to us. Thank you very much to the audience. Now let me just briefly mention some future events that our office is organizing. So in the beginning of March, we will have an Austria showcase to Bangalore and Hyderabad, which is titled Startup Nation India. So it will be focused on startups largely. And then just 1 week after, there will be an Africa-India Innovation Challenge at the World Summit Awards in Vienna. And this event is sozusagen the kickoff event for the India Innovation Summit landing zone, which will be in October, mid-October, also in Bangalore and Hyderabad again, where the winners of this challenge in Vienna can come for a week to India and meet with Indian startups and also with sort of local landing zones and local venture funds, for example. Then we will have another webinar, this time focused on blockchain. It will be in September 2020, and in June we are planning a learning journey specifically on fintech, and that will take place in Mumbai. And then some further fintech events that my colleagues in other countries will be organizing. So we have Dublin, for example, the future of banking. So it's also a little bit related to Facebook, big tech, and blockchain payments, which will take place in March 2020. And then there will be a webinar from our colleagues in Turkey, which is also on fintech and how the situation is looking in Turkey. And then in February 2021, there will be a learning journey to London, future of fintech. So with that overview, let me thank you once more for all these people who were still staying with us, and also thank you very much to you, to the speakers for this very interesting presentations, and also to the good answers in the end. And with that, let me wish you a nice afternoon, or for us a nice evening here in India, and hope to see you next time or at any of our upcoming events. Thank you very much.
Thank you all. Thanks
so
for
much
the opportunity.
Thanks. Bye.
Thank you.
Thank you.